Have you ever wondered why financial management is crucial in the field of architecture? It's a powerful tool aiding in project planning, control, and decision-making. It's the backbone that supports your creative endeavors. Understanding financial management concepts, such as general ledger accounting and project cost accounting, can often make you a differentiator in your architectural practice. So, what exactly is general ledger accounting? Picture a comprehensive journal that meticulously records every financial transaction your company makes. It's like the DNA of your company's financial health, encoding everything from your daily expenses to income. This ledger aids in the preparation of financial statements, giving you a thorough understanding of where your money is going. In essence, general ledger accounting provides a bird's-eye view of a company's financial health. Now, let's move on to project cost accounting. What is it and why is it important? Project cost accounting is a method that helps you track and control the costs linked to specific projects or jobs. It's like a financial magnifying glass, zooming in on individual project expenses. And why does it matter? Well, it allows architects to understand the profitability of each project. Project cost accounting, in short, helps you keep track of your project expenses and profits. Let's recap what we've learned today. General ledger accounting is the backbone of financial management, recording all transactions in a systematic way. On the other hand, project cost accounting tracks expenses and revenues of individual projects, helping architects make informed decisions. Both are crucial for effective financial management in architecture. With these tools in your arsenal, you're well on your way to mastering financial management in your architectural practice.